I believe that Amazon stock and Netflix stock are massively overvalued. And today I'm going to take you guys through some mathematics on why I believe these two stocks are massively overvalued right now, okay? Now, before anybody goes on and attacks me and says, oh, you don't believe in Amazon, you don't believe in Netflix, that is a bunch of BS. I absolutely believe these companies have futures, okay? But just because I believe in a company doesn't mean it deserves a ridiculous valuation. And these two companies, in my opinion, are the poster child of kind of companies that have ridiculous valuations on them right now, okay? Just because you could be doing better and better stuff in the future, just because you might have more profits coming in the future, doesn't mean that you deserve a ridiculous valuation. I'm going to explain to you guys how ridiculous these valuations are out of control on these two particular stocks. So I hope you guys really enjoy this today. Let's just get right into this, guys. So something I want to start out with here is we got to think, what is the average forward PE for a company in the S&P 500? Right now, the average forward PE on a company is right around 16, okay? Right around 16. Now, this takes into account companies that aren't growing right now, maybe are shrinking, companies that are fast growers. This takes in the average of all companies out there, okay? So the average forward PE is somewhere around a 16 right now, all right? That's something to keep in mind, and then we're gonna go from there, okay? So let's deal with Amazon first, and then we'll head down to Netflix, and then I'm gonna tell you guys whether I'm gonna think about shorting either of these stocks, or whether I'm gonna buy put options, or whether I don't want to touch any of them either way, okay? So Amazon first off. Amazon right now has a market cap of $850 billion, all right? $850 billion in this company. The way it's going up, it could approach $1 trillion market cap by the end of this year if it continues its growth trajectory as far as where the stock is going, okay? $850 billion. Unbelievably expensive market cap, okay? Unbelievably expensive. They have two main businesses. One is their retail side of their business, okay? The other business is Amazon Web Services. Those are their two main businesses out there, okay? Now, Amazon is expected to have a profit this upcoming year of somewhere around $10 billion, all right? Which would be by far the biggest profit Amazon has ever made. This is, when I say profit, I mean net income. This would be by far and away the biggest they've ever had, and that's expected to be this year, okay? Somewhere around $10 billion. That's great, all right? But that puts the company at a forward PE of 85. A forward PE of 85. Remember, the average company is trading at 16. They're trading at an 85. Now, I will give it to Amazon. They deserve a bigger premium for where their forward PE should be compared to other companies. Why? Because they have massive growth. This company is growing in a major way. You can just look at their growth numbers and revenue across the board. They're growing. So they definitely deserve a premium over the average company. However, do they deserve an 85? I don't know about that, because here's how we got to think about it, okay? Amazon basically needs to have $53 billion in profit per year someday to make this valuation that it currently has make sense, okay? So they need to go from what their expected profit is this upcoming year, which is around $10 billion. They need to increase that to $53 billion to make the stock seem like it's justifiable, okay? It's valued at a fair value, all right? They need to hit this number someday, guys. That's a big jump from $10 billion in profit that they might do this year. Remember, it's not even a guarantee that they will do $10 billion, but like I said, this would be by far their biggest profit ever in the company's history. They do this number, that's great, but still from $10 billion to $53 billion, we're talking about a massive, massive, massive difference. Now, something you might say is, well, Amazon, they spend a ton of money, okay? They spend a ton of money, they're expanding, they're buying, they're making new fulfillment centers and new distribution and doing all these different things, expanding their businesses, new servers, more cloud infrastructure, they're gonna be building a new headquarters and whatnot. As of right now, basically based upon my calculations, Amazon could cut around $10 billion of spending, okay? Now, the problem with cutting this $10 billion in spending is this would eventually just kill future growth, okay? They would be able to keep what they have currently going, okay? Their current business in Amazon Web Services, their current retail business, but that extra $10 billion roughly is for stuff that's expanding out their future, that's gonna keep the revenues pouring in and whatnot. So if they cut that, yeah, then all of a sudden they go up to maybe, let's say, next year they make a $20 billion plus profit. Now we're getting closer to that number, but at the same time, they cut that, then they're cutting off their growth, and then I digress, and you can see that this company wouldn't make sense at the valuation, right? So, because then it would become a company that's no longer growing eventually, all right? So that would be an issue. So in Amazon's situation here, in my opinion, This company is massively overvalued. Do they deserve a premium over what an average company is? Yes, absolutely do they deserve a premium. But do they deserve to be trading at a forward P of 85 when the average forward P on companies is a 16? No, absolutely not in my opinion. They got to somehow someday make $53 billion in profit, guys. That's a big jump from here, okay? Can they get to it? Maybe. But when's this going to be? 5 years from now? Highly doubt it. 10 years from now? Maybe. But a lot of things can change in 10 years. That's something else we got to keep in mind there. A lot of things can change. 10 years ago, you could have said to most people out there, 10 years ago, you could have said to the average person, is Walmart still going to be by far the most dominant retailer in the world and the most relevant retailer in the world? 10 years ago, people would have said yes, okay? Almost every single person you would ask, they would have said yes. If you would have said Amazon, they would have said, Amazon, yeah, right. No chance of them, maybe they could be, definitely increase their online business and whatnot, but they're not taking out Walmart. Well, now guess what has happened? Amazon has come in and they've expanded their business in a huge way, and now they are the most relevant retailer in the entire world, and certainly in North America, okay? Walmart's now the second fiddle, okay? I've been talking about this for several years on this channel. So, things can change fast. I'm just going to say that. I'm not saying somebody's coming to take out Amazon. I'm just saying if somebody does take out Amazon in the next 10 years, don't be surprised, because this is the way retail moves, okay? The big dog comes in, they kind of dominate for a decade or two, and then somebody comes in and takes the market share away from them. It's consistent across retail throughout history. A new business model emerges and it takes out the old business model, okay? Not saying that's necessarily going to happen. I'm just saying when you're expected to someday hopefully make $53 billion, and a lot of things could change in that amount of time, guys. That's all I'm going to say about that. So Amazon, in my opinion, overvalued, all right? Netflix, let's get into this one, okay? Another one of the hottest stocks in the stock market. I think the 52-week range on Netflix is probably somewhere around like $144, and now it's near its 52-week high, I think $418. The stock has just gone absolutely parabolic, all right? Netflix now has a market cap of over $180 billion, all right? Netflix is a video streaming service. It's their whole business model, okay? That's their one-trick pony. That's all they have. Their video streaming service. That's it, all right? Netflix has a market cap over $180 billion, all right? Massive market cap on this company. Mind-blowing, okay? Netflix expected profit this year is somewhere around $2 billion. Now, this would be by far their biggest profit they've ever had, okay? So they're expected, net income is somewhere around $2 billion this upcoming year. That would be phenomenal. New record for the company, all right? Now, this puts the company still at a forward P of 90. All right, even if they have by far and away the biggest net income they've ever had in the company's history, they're still going to be at a forward P of somewhere around 90 on this company. All right, 90. We're at an average of 16. They're at a 90. Okay, Netflix needs over $11 billion in profit per year someday. All right, to get from $2 billion of net income to over $11 billion someday to make this valuation justifiable. That's a massive move up there, guys. That's a massive move up. They're going to either need to increase customers in a dramatic rate, or they're going to need to basically go up on prices in a dramatic rate for customers, because to get to $11 billion profit, when you're expected to maybe only pull in $2 billion, which once again isn't guaranteed, that's a massive difference, okay there, guys? Now, here's the thing with Netflix. They could get to this number tomorrow, literally. Netflix is expected to spend around $12 billion in buying content, producing content, all that type of stuff, okay? So they could cut this $12 billion, and next thing you know, they'll probably make, $14 billion or so this year, which makes their market cap justifiable. It'd actually be lower than the average forward P. The problem is this is so unrealistic, because they cut this $12 billion, and all the Netflix customers will eventually be gone within a 24 to 36 month period. Like, they would just devastate the business, because if they stop spending, then they stop being able to buy content, and that content expires, somebody else goes out and buys it, okay? And then on top of that, they produce no original content, which, if they're not producing any original content and then they're losing all the old content, like, why would anybody have Netflix? Everybody would just start canceling their memberships, and within 24 to 36 months, like, Netflix business would be devastated, like completely devastated, like literally no business model there anymore. or they would probably be out of business. So it's completely unrealistic. Now you can say they could cut some of that spending, okay? So let's say that maybe instead of doing 12 billion, maybe they cut it down to 6 billion, all right? They cut it down to 6 billion, and so then all of a sudden their profit goes up to 8 billion, and it looks like, okay, now all of a sudden we're talking here. Now they got $8 billion in profit. Dang, now they're doing good. But the issue is they are almost kind of forced to spend this huge amount of money, okay? The reason being is they got everybody coming in this space over the next 1 to 2 years, you know, from the big tech giants like Facebook, Apple, Google, all those type of companies I've talked about on this channel before are all coming in their space over the next year or two. Then you got the old dogs like Disney and whatnot coming in their space. You got Hulu, you got all those type of competitors. This is just a massively competitive space. This is going to become arguably the most competitive space. Oh, and by the way, Amazon with Amazon Prime Video, that's something they're taking more and more serious and they're spending a ton of money on. So you have so many competitors seriously taking this game super serious for the next year or two that they are pretty much in a position where they have to spend a ridiculous amount of money on new content, producing content and those type of things to keep their customers interested from going to some other service or canceling their Netflix or whatnot. So, you know, you can make an argument, yeah, they cut it down maybe in half and they just spend $6 billion a year, but man, when it's this competitive out there, you kind of almost need to keep this up, okay? So, as far as, you know, me, am I thinking about shorting either one of these stocks? Which shorting, by the way, for those of you guys not know, is basically placing a bet that these stocks will go down. Absolutely not. I will not even think about shorting Amazon or Netflix. I would not even contemplate it for a second, okay? The reason being is just because, you know, I believe these companies are overvalued doesn't mean the rest of the investor base believes the companies are overvalued, okay? So just because I believe it doesn't mean those stocks are gonna go down, all right? So that's something we've got to keep in mind. And keep in mind, when you short stocks, that stock could go up and up and up and you could just get absolutely killed. So would I consider shorting Netflix or shorting Amazon? Absolutely not. No interest, okay? Would I think about even buying put options in Amazon? No, I'm not even interested in buying put options, okay? Maybe if the valuation keeps creeping up and it gets over, then maybe we're talking about maybe a situation where I would contemplate maybe buying some put options. But as of right now, no. Netflix, if this stock keeps increasing and hits around a $200 billion market cap, which it could, maybe within weeks or maybe a few months, right? I would consider some puts for 2021, okay? So 2021 options should be coming out in around October. Usually they're released September, October. So the 2021 put should be available. I would think something around a $300 strike. If I do decide to do anything, somewhere around a $300 strike. But once again, I would want to see the valuation keep creeping up, and I wouldn't want to pay a huge premium on this. You know, I would maybe be willing to pay $5 for that, the $5 premium for that, or $7 premium. Nothing really more than that I'd really want to pay. And kind of just placing my bet that, you know, this space is going to get massively competitive over the next couple of years. I think it might end up hurting Netflix profit more than ever because they're going to have to keep spending like at an insane rate to try to fight off all these big dogs coming in who have just ridiculous sums of money to spend on content, producing original content, buying content, all those type of things. So, you know, I would consider that, but that's not even a guarantee either because, you know, sometimes these stocks can just get like cult-like followings and they don't care about anything, you know. The investor base, you know, especially the big fund managers, they don't care that, you know, these companies are ridiculously valued. They're like, oh, just someday they might be able to make enough money to make this investment justifiable. They're hot stocks right now. So, but in terms of the only one I would consider maybe buying puts for 2021 on Netflix. I would love to hear your guys' opinion down there in that comment section on these two stocks, Amazon, Netflix. Do you feel like they're overvalued, undervalued, fairly valued? I would love to hear from you guys in that comment section as always. Make sure you follow me on Instagram. I post a ton of Instagram stories, especially a lot of things that are breaking news in the stock market. Thank you for watching. Have a great day.